Okay, welcome to my YouTube update. I want to show you something. This was the market when they thought that Hillary was going to win, and then it switched to this, and that's what we call a sucker's rally. That's right, sucker's rally. There's nothing behind it. This rally right here, there's nothing behind it. It's all the people who shorted bought their positions back. Now, can they break this out to a new high? Sure they can. Okay, just in sympathy with the Nasdaq. But here's the real world. What's going on? All right, this rally that we've had is because of the future. It's because of what Trump stated he's going to do. He's not going to depend on monetary policy because when they did, Obama did, the economy couldn't grow. All we had was easy money, 0% money, which all they did is give it to companies to buy their own stock. Their stocks went through the roof, went up 130% with no earnings, no profits. Okay, no profits, and that's the deal. That's what happened, and and that's how they're able to keep this market going for 8 years, and right here for 8 years. This was all first. They did it with quantitative easing from here to here, 2012. All they did is did an exchange with the banks. They said to the banks, we'll monetize your debt. So they had on their balance sheets, the banks, bad subprime mortgages that were worthless. They had bonds that were worthless. So they said, well, what we'll do is we'll give you face value. We'll print up $2 trillion in exchange for those bonds and subprime mortgages. We'll give you $2 trillion. You take that money and you start buying stocks. So to push the stock market up. Then we'll tell a story to the folks out there that say that, oh, because the CEOs of companies are starting to see these stocks go up, they're going to get encouraged, and they're going to turn around and start doing capital spending. And that capital spending, okay, is going to be huge, and they're going to be buying equipment and machinery, and that's going to increase wages, because when you do capital spending and your productivity increases, you give your people wage hikes, you hire new people, and all the new equipment you buy, it's the domino effects. You call the multiplier effect. You're creating jobs all over the country, okay? But that never happened, okay? It was just a big lie. All the money that they had never went into machinery, never went to capital spending from here to here. They took that money and they bought their own shares to make the stock price go up, okay? Then when we stopped buying the bonds to put the liquidity in the market, the fake liquidity, it was all fake liquidity. It wasn't any real liquidity in here. It was all fake. Okay. And then when they stopped their QE from here, 2012, they extended. Why this extended and this one didn't extend and this one didn't extend? Because they did something different. They did massive stock buybacks. Okay. And that's what happened right here. Everybody was shorting the market here. Okay. See, everybody was shorting it. And then they go, whoa, we better not short it. We got to buy our stock back. And bam, right here, bam, it went up. Okay. The stocks that we should be keeping our eye on are the construction stocks like EME, okay, EME, those are good construction stocks, okay, and you can see the big, but don't chase them now. You got to wait till they pull back. All these stocks will pull back, or you got to, like your defense stocks, like Lockheed Martin, okay. Same thing. They're all going down. Now they're going up. They're going up because they're saying, oh, I was wrong. I thought this economy was going to go to hell with Trump. I got to cover my short. So it's going up. Look at the restaurants. But here's the problem with all these. This is the future. This hasn't happened yet. In other words, we went up and there's no profits or anything to bring it up here. So it's going to come all the way back to where it started, okay? So we got to wait till it pulls back, find which ones are the strongest groups, okay? And then we go buy them. That's how it works. Because remember, we've had a GDP, okay? We've had a GDP through this fake monetary policy, okay, all the way up here The GDP is only, we'll put 2%. We'll give the benefit of the doubt, okay? But wait a minute. The stock market went up 138. So how could we have, let's think about it this way. Stock market went up 138%, but our economy only grew 2% right here. So between here and here is all one big bubble. All one big bubble. So now what Trump's got to do with his monetary policy, with his fiscal policy, he's going to start cutting taxes right away. He's going to start getting rid of all these regulations. Okay, so what's going to happen? This should start coming down because he's not in there yet. This will start coming down, but we're not going to go all the way down here like we would have originally with Hillary. So I think we'll probably pull back. If anything, we'll pull back. The worst case, we pull back to here, and then Trump should be able to get his program going. So where interest rates are going up and the economy he's growing is going up, so it absorbs the interest rate hike right here. That's the key. He's got to absorb it with the economy growing. He'll do it. He'll figure it out. And that means we're going to have a wonderful stock market, okay? So right now, what I'm looking for right here, okay, this rallied up, and I'm looking for this either break out a little bit higher, and then I figure that she's going to start dropping back down, giving up this whole rally here, okay? And then what we do is we'll turn around, and then she should start going back up like this, and then hopefully she makes a lower high. Then I hope she turns around and drops again like this, and then we go down until we reach this point here. This is what I'm hoping it's going to do, okay? I don't see how this is going to break out just looking out, way out in the future. He's not even in the Oval Office by saying, oh, this is good. He's going to print all this money. It's inflationary, but we're going to grow the economy at 3% so we can absorb these interest rates going up and the cost of money. It takes time to do that. Every time you put an interest rate hike on or you deduct an interest rate hike, okay, it takes 18 months to work through the system. So this all happened in a few days, this big rally. So I'm still looking for a pullback. If we don't get the pullback and we keep rallying like this, then what we'll do is take those best stocks we find, as I said, in construction and defense, and we buy them until it breaks down. Okay, so that's where we stand. So I think we will see a pullback. Until that pullback, we may see a little more move to the upside, but eventually we will get that pullback, and then we can buy all these good stocks that will be on sale, especially the stocks of construction and defense. And the dollar, if the dollar can start coming back down, which it will, the dollar can start rolling its way back down again, then our golds will start going up. Okay, we need our golds to start going back up. See, like GLD here, watch. That's only going to happen right now. Okay, if the dollar keeps going up, we'll continue shorting it. Right now we're shorting golds, okay? But if that dollar stops and starts coming back, then we've gotten a pretty good discount on these stocks to start buying them again, okay? As soon as we get a W formation. All right, I will see you on the charts.